Hey, what's up, guys? I just want to do a quick video on interest rates. Today is Sunday. We're heading into one of the biggest trading weeks since maybe last year. The Federal Open Market Committee meeting takes place this Tuesday and Wednesday, where they decide where to set the federal funds rates at, whether they're going to raise the rates or lower rates, or keep them the same. Who knows? We've all heard these terms tossed around the past couple of years. It's all about inflation. They have expressed their desire to hold that inflation growth rate at just 2%. That's their target. And we'll see if they're sticking to it or not. It's going to be close. We've seen both good data and bad data. So we'll find out Tuesday or Wednesday. But I just want to do a quick video on how these rates not only affect the market, but affect you and I. So let's get started with the broad economy here. So interest rates are one of the largest driving factors of economies, or United States economy. So when you have free money, it encourages growth. And that happens because people are more apt to borrow money. And when I say people, I mainly mean businesses. They're not going out there buying, new SUVs and borrowing money for Louis Vuitton purses on their credit card. No, they're buying bulldozers. They're buying equipment to build buildings, to build houses, to start businesses, things of that matter. And if interest rates are lower, they're more apt to borrow money to get the ball rolling on those businesses. And of course, when you have a business, you're more likely going to hire people. Well, when you hire people, well, the snowball just keeps going and going. That person's going to end up building a house, and et cetera, et cetera. So it's really just a huge driving factor of businesses. When you have a lower interest rate environment, people are more apt to spend money. They're more apt to borrow money and instead of save it, right? So if you have, pretty much a zero Fed funds rates, which we saw, basically since 2009 to the virus era, if you will, they're more apt to go build a house, more apt to go buy a house, and more apt to start a business or things of that matter. They refinance their mortgage even. That employs people. It's all about growth, and a low interest rate environment very much encourages growth. Well, on the other hand, a high interest rate environment, which we're somewhat in now, really constricts the economy. People aren't as encouraged to go borrow money for that new bulldozer or that equipment to build a home with or start a business or any of that matter. We all know mortgage rates are 7.5% or higher nowadays. Well, who's out there building a house? Very few people, and a lot of it's cash buyers. I know I don't want to get rid of my 2.8% mortgage, and that's hindering the economy in ways. So if you think about it, on one side, lower interest rates forces the economy to grow, and high interest rates will kind of constrict it down, control inflation. And that's what the Fed really wants. And that's one of the things that they're going to decide Wednesday is to raise rates, which probably maybe not happen. Keep them the same, it's probably what they're going to do. Possibly even lower them 0.25%, who knows? But it's just huge impacts on not only small companies and people like you and I, but also your Apples, your Googles, the big dogs, the big players. It's basically the cost of money, right? And if a company wants to grow, they would rather have a low interest rate to borrow money, to inject it into their company to grow. It's as simple as that. It's the most complex thing in the world, but then again, you take a step back and you look at it from a a more simplistic standpoint, if you will, and it's the cost of money. If it's expensive, I don't want it. If it's cheap, give me all you can, basically. But interest rate literally affect every loan, every credit card. It's all based off the Fed funds rate. CD rates. I mean, you think about it this way: like we have 5% CDs now. We've had them for a year and a half or so, maybe. Would you rather invest your money and risk losing money, or go down to your local bank and put 100 grand in at 5% for 6 months? So, I mean, you can look at it that way. It affects the stock market, it affects businesses, it affects you and I. It's literally the economy is driven